Reality of higher for longer interest rates putting a big dent in technology. That sector has been squeezed by rise in treasury yields, with some of the mega caps losing significant ground over the past month. Joining us right now is Doug Clinton. He's the managing partner at Deepwater Asset Management. You shaved the beard.
I did get rid of the beard.
You had the beard. So, we'll put that aside. The question is, what do you do about the Magnificent Seven? Are they magnificent anymore? Will they be magnificent again? What's an investor supposed to do?
They're still magnificent. I think that the best thing you can do is probably just hold and stay the course right now. And the reality is, if you think about rates rising,
meaning because you've already lost. Meaning, if you were going to get out, you should have done it beforehand.
And in our view, these are great companies you want to own over the long term. They're not stocks that we try to trade in and out of. We want to own stocks for the long run. And these are still great companies despite this pullback. When you look at interest rates, 1% increase in our models for the discount rate, it's about a 10% headwind to valuations. And if you look at where these stocks have come from, kind of their highs this year. 1% change in rates.
Change in rates is a 10% change in the equity value.
That's correct, in our models, give or take a little bit.
So what is your Fed model at the moment for where things go for the next year? Because that would actually have a huge impact on this 10% impact on the equities.
It would, and I would say we're not bond experts. What we try to do is really focus on being tech experts. And instead of predicting interest rates, we're trying to look for stocks within the Mag 7 that actually have catalysts that could buck the interest rate trend if they keep going higher, or if rates go lower, you get an even better push on that catalyst. Google, for us, is the Mag 7 stock that has the best catalyst. They've got a new AI model coming, Gemini, which is their most powerful AI model that they will have released to date. Some of the early indications are it could be better than GPT from OpenAI. And if that's the case, I think it changes the narrative on Google, where they've been kind of a laggard in AI. We've been disappointed.
So it may change the narrative on Google. The thing that I can't figure out between Microsoft, Amazon, AWS, Google, and the like is whether we fundamentally think that the AI technology, which is spectacular, I mean, it's just beyond spectacular, creates demonstrable value for these companies, or ultimately is something that becomes a commoditized product that everybody has to have, that's part of the business, and ultimately becomes almost a defensive piece of it in terms of owning market share. Yes, Copilot will cost you 30 more, and yes, there'll be incremental dollars, but that it doesn't actually change the ecosystem fundamentally.
We think it will. And I mean, the reality is, if you rewind the clock 20 years ago, I think we had the same questions about the internet. Does the internet create actual, real incremental value? And for us, AI is the same thing. Every company will be an AI company in the next 10 years, just like every company has become an internet company. And I think the providers of the infrastructure, the providers of the tools that do that, including the Mag 7 stocks, will benefit.
And your gamble is Google is the winner?
We think Google is one of the winners. That's our top holding across Deepwater's funds. Like I said, we think they have this catalyst that's incredible. It could result in a higher multiple if investors start to apply more duration to Google's business.
Who on the Magnificent Seven do you not keep on your list? Is there one or two that you're just like, we're not into that?
We sold Amazon earlier this year. It was a stock we owned for a while. That's one where, again, it's a great business. All these are great businesses, so there's no bone to pick with them. For us, it's a matter of selection, and we want to own the ones that we think have the best opportunities over the next 1 to 3 years relative to the others. Google and Meta are those two for us.
You could replace it with Comcast. I mean, it's just a...
I don't know if they have enough AI.
What's the piece for, when you think about Meta, it's the AI piece for you?
It is. They have optionality with AI, so increasing the amount of time that users spend on the platform by showing them more relevant content.
Doug? Yeah, we lost your mic. I don't know.
Right. Keep going.
By showing more relevant content to users through AI, just like TikTok has done. They've really been the innovators with AI. I think Meta is implementing that across their platforms, and that's good for ad dollars.